We're talking about hyperscalers in particular, which have been the huge losers until yesterday, where you actually saw a little bit of a turnaround. Why do you reject the notion that people are pushing back against the spending plans of some of these tech behemoths?
Look, the hyperscalers is $700 billion. I mean, that's what's funding the AI revolution. I mean, when you talk about memory chips to NVIDIA to everything else, but that's just the first phase, because what the hyperscalers are doing is, this is the build out. It's Vegas Strip building in 1955. But ultimately, the monetization now is going to come. I mean, when you look at Meta, they're not just spending to spend. You look at Microsoft, they essentially own the enterprise. Alphabet, 5% of their customers have gone to the AI path. Same thing with Amazon. So my whole point is, you've had this tech rally, but Mag 7 right now, penalty box, essentially. I think it significantly outperformed second half of the year. And I think earnings season, as we see in July, I think it's going to be a huge validation moment for big tech.
So the Vegas Strip maybe is a decent analogy on the just actuality of it, not in the scale. I mean, we're talking JP Morgan expecting $5.5 trillion to spend on CapEx spend for AI heading out to 2030. We're talking about massive numbers that are accelerating, not decelerating. And capacity-constrained companies, right? I mean, some of these companies have said, we can't give you all the compute you're looking for. So how do you see them monetizing without raising prices enough to really trickle into the cost of what everybody is spending on an everyday basis?
Yeah, well, first off, for every dollar spent on, let's say, an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. So that's extremely important in terms of what you see in terms of, you talk about some of the single stock moves, just the broadening out what we're seeing in terms of tech. And you could argue for names like Caterpillar and others. But when it comes to hyperscalers, look, it's an arms race. That's why the question is, like, can they actually cut CapEx? They can't. In other words, like, you're diving into the deep end of the pool. Because if they cut back, then they go behind others in line that will clearly go ahead of them. Anthropic, OpenAI, ultimately, as they go public, they'll just have more and more cash. And I think that's the reality right now. And to those, the bears will be like, oh, it's spending to nowhere. It's the opposite. I mean, you're essentially building out a new economy for consumers, enterprises, and for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
But what about demand destruction? Does that happen, especially when we see something like Apple come out and across the entire suite having to raise prices?
Sure, look, I mean, there's going to be negatives, just like we see with memory, because there's a limited amount of memory chip players. You can't just all...
So there is a breaking point, though.
There is a breaking point to a point where, like, okay, if you continue at these prices, eventually there's cannibalization, there's churn. For Apple, at these levels, 100 bips of churn maybe. When it comes to iPhone, there'll be a $150, $200 price increase, but then there'll be subsidies from carriers and others. But look, now you're seeing where it's called Ramageddon, or what we're seeing in terms of memory prices. That is going to have an impact, but I view it as it's paying a small tax on the broader ecosystem that's being built out by big tech.
But if there is a little bit of a breaking point, when does it happen?
Look, I think in the next 6 to 9 months is where you need to see some sort of stabilization when it comes to prices. You need to see scale. You need to see ultimately what we're seeing in terms on the token side, where you need to see, like, prices start to come down. CapEx will be about $1 trillion for big tech next year, but then the monetization starts. So essentially, you start to actually now see the monetization piece, which is very important to just investors feeling like Meta, they're not just spending like 1980s rock stars for no reason.
There's one story that really caught my attention over the past couple of weeks. It's the idea of Microsoft shifting to Chinese large language models that are open source and that are cheaper. It's the idea of OpenAI pushing back their IPO, and a question of how much OpenAI and how quickly the Anthropics of the world can monetize given the cheaper competition overseas. How much do you see that as a pressure point that hasn't fully been realized or even actualized in terms of people's ideas?
Look, my view, and I think you see with OpenAI and Anthropic, the models eventually will become commoditized. And it's not just OpenAI and Anthropic. You'll have hundreds of models across the world, vertical specific. The value will be in the data, how quickly that they could penetrate enterprise. Microsoft, in terms of Nadella is seeing around the corner, understanding like you have to ultimately diversify when it comes to models, and eventually as it becomes a global sort of game. But when it comes to Anthropic and OpenAI, they understand enterprise is golden goose. That's what they're going after. Now, to some extent, part of the reason that Microsoft, that you see the stock the way where it is, because there's a view like, okay, that becomes competitive. They had OpenAI, but now like, where do they sit relative to enterprise? My view is on enterprise, Microsoft will continue to be the ultimate winner, but it just shows it's a convergence what's happening across the AI ecosystem.
If that's a commoditized resource, the large language models, and it really is the data providers are not OpenAI and Anthropic, well then what's the monetization prospect for some of these companies that potentially are going to IPO at $1 trillion?
Well, for them, it's all about enterprise. I mean, if you look at Anthropic's growth, it's been unlike anything we've ever seen in terms of ARR. Now, for OpenAI, it's a bullseye on their back. They have to continue to monetize in the enterprise. Because enterprise, when you think about all the data centers being built and all the memory and everything, it's being built for what will be the use cases on enterprise, on the consumer. Software vendors, in my opinion, are the ones that it goes back to the second, third derivative, just like cybersecurity. So I think part of where I think investors, and I don't think it's reflected in the stocks, is like they're underestimating the scale and scope of what this is all going to look like. And I think we've talked about it. It's like party start at 9 p.m., goes to 4 a.m.,
but Dan,
about 11 p.m.
Can you monetize a model that's currently restricted?
No. And that's why when it comes to Anthropic, that's why they're starting to play nice when it comes to government. You're seeing some sort of, compromise or at least some moving of the goalposts. And that's important because Anthropic right now, I mean, you're talking about the best model in the world. You cannot be on relative to what we see on the DoD and the Pentagon. That's why it's an important time for Dario and Anthropic to get to some sort of compromise when it comes to U.S. government.